Well, I think globally there's this increased awareness of how people are communicating with investors, right?
Yep.
I think the traditional ways of communicating and what are they communicating, how frequently are they communicating, and what's the level of detail that investors are now expecting. And I think that I mean, we're seeing that across, at least all the markets I've been exposed to, um, and at all size of organization, right? So
Yep.
you would naturally see that with the institutions, but you're seeing that with smaller startup companies, mid-sized companies, companies of all sizes. So to me, that means a couple of things. One is there's still a lot of capital to be had in the markets.
Yep.
There's a lot of different types of organizations trying to get investors' attention to get to that capital. Now, whether or not they have the right deals to invest it is a different, that's more of a market
Yep.
by market thing, right? But we're seeing a lot of interest and activity in fundraising, right, across the board, and actively, and those could be funds, for actual funds, or they could be clients that are kind of doing more deal by deal kind of investments. And then overall, it's the same old has transitioned, right? The quarterly report that's 45 days after the end of the quarter that's getting sent to the investors, like that's just not cutting it anymore, right?
No.
So
No.
there's too much happening globally in the global markets that the investors are aware of, and they want to know, well, what's my risk and exposure to X, right? So that could be a tenant going bankrupt, or it could be, a regional issue with vacancies, et cetera. And they want to know, hey, am I invested in that? Is that going to impact me? And they don't want to know 45 days after the quarter end.
No.
So that's, that was probably not succinct in terms of three distinct things, but I would say it's how they communicate with investors, what they communicate with investors. And then, a third thing would be, in a lot of markets, we're seeing an increase in fundraising, in the US and a little bit in Canada. And I'm curious if you're seeing any of this in the other markets. We just met today about it. We're seeing on the fundraising side too, this concept of, crowdsourced funding as
Yep.
well, right? So you've got the traditional kind of institutional millions of dollar commitment type of thing. And then you've got, more of a retail view
Yeah.
of,
Yep.
investors you don't know, coming to your platform and saying, yeah, I'm interested in this investment, and contributing, higher volume of investors, lower,
Yep.
investment dollar.
Yep.
And that, is a whole different type of interaction as well. So
Absolutely, and we're definitely seeing that. A couple of guys that I know in this region have put a lot of work into that.
Mhm.
There's one here in Hong Kong and one in Singapore that have been very successful,
Mm.
and they're now in a position. And to be honest, I think they've mostly, because it's easier, they've mostly started off doing debt, investing in debt.
Mhm.
Right, so going into a GP who's doing debt, but now they're going into assets.
Yep.
And what they're typically doing is taking 20%
Mm.
of a deal, right? And so they're saying to the GP, you get your traditional funding for 80%. We'll provide the other 20% as a single wedge, but behind that they've got their own fund,
Mhm.
which has then got. I mean, yes, they're qualified investors, but they're taking sort of down to $10,000.
Mhm.
Right? Some of them are still at 100,000, but some of them sort of by whatever, I guess, loops in the legislation have been getting down to sort of $10,000. And
Mhm.
so what you're seeing is, yes, that 20% could have 200 investors in it.
Yep. Yep.
Right? But it's as one investor as far as the GP is concerned. But yeah, then the level of reporting that you need to think about. Okay, so you're just reporting back to that aggregator. But that
Mhm.
aggregator has got behind it, a couple of hundred of investors.